Hey, Claire here from Pitt News Magazine. If you've ever felt like financial jargon was a secret language designed just to keep you out, trust me, you're not alone. I still think extrinsic value sounds like a fancy gym supplement, and intrinsic value is probably what my yoga teacher wishes I'd find in Downward Dog. But today we're breaking it all down. Our very own David Duty, trading veteran, friend of Mr. Turner and resident common sense guru, has a knack for explaining the complicated stuff in plain English. In this article, he's using one of my favorite things, metaphors. Seriously, if you can compare trading to real estate or, say, roping a calf, I'm listening. So, get comfy, maybe imagine you're shopping for your dream house, or your dream stock, and let's dig into what really matters. Knowing what something is actually worth, and what extra perks come with the deal. Intrinsic, extrinsic. Don't worry, it's about to make sense.
Ever felt like the world of investing just, speaks a completely different language?
Oh, definitely. All those charts, numbers.
And the terminology. Our source mentioned fancy terminology.
Right. It can make things sound way more complex than they need to be.
Exactly. And our source for this deep dive, David Duty, is a veteran trader, like 30 years in the markets. He actually had this big realization himself.
What was that?
That these core ideas, things like intrinsic and extrinsic value, they get wrapped up in all this jargon, but they're actually pretty straightforward once you break them down.
Yeah, and that's pretty much what we're here to do today, isn't it?
Mm-hmm.
The financial world, well, it does tend to overcomplicate. So our mission really with this deep dive is to just cut through that noise.
Okay.
We're going to unpack David's way of looking at intrinsic and extrinsic value, specifically for stocks, stock investing.
To give people a fresh perspective, make it easier to grasp.
Exactly. Easier to understand and, maybe more importantly, actionable. Something you can actually use for your own portfolio.
And David's got a trick for this, right? His sort of secret weapon.
He does. A really relatable analogy. Something most people already get.
So there's
real estate.
Ah, okay.
Yeah, he thinks that comparison is just, well, absolutely key to getting these core ideas.
All right, let's unpack that then. Real estate.
Indeed. So when David talks about intrinsic value, he compares it to the actual tangible worth of a house.
Okay, the bricks and mortar, the land.
Precisely. The property's fundamental value.
Yeah.
Things like its location, the condition it's in, what the demand is like in that area.
Right, what the house itself is genuinely worth.
Yeah, regardless of, say, any rent you might get from it.
Yeah.
It's the core value.
Okay, that makes total sense with real estate. But how do we translate that to something like a stock, a publicly traded company? It feels a bit more abstract.
It can seem that way.
What are we really looking at for a stock's intrinsic value?
That's a good question. So for a stock, its intrinsic value is, well, basically the company's true underlying worth, separate from whatever its price is doing on the market that day.
Okay, so not the ticker price flashing on the screen.
Exactly. Now, you might look at net asset value, the NAV.
Assets minus liabilities, right?
Yeah, simple calculation.
Yeah.
And that gives you a baseline, definitely. But David points out that true intrinsic value often goes much deeper than just that number.
Deeper how?
It's about things like the company's earning power, its potential for future growth, the strength of its brand.
The less tangible stuff, too.
Right. Everything that makes the company valuable in and of itself, kind of independent of what the market sentiment is right now.
Okay.
Think of it like the blueprints and the solid foundation of a building, not just the price someone's willing to slap on it today.
Okay, I think I'm getting that. Intrinsic value is the core, the foundation, the house itself. But you mentioned rent earlier. What about everything beyond that core value?
Right. If intrinsic value is the house, what else can that property do for you?
Yeah.
Well, that's where extrinsic value steps in. It represents the potential income or maybe other benefits you can get from owning that asset beyond its core intrinsic worth.
So back to the house.
Back to the house analogy. This is exactly like the rental income. You lease it out to tenants, you get rent.
Makes sense.
That income doesn't change the house's physical value, right? The bricks are still the same.
Yeah.
But it definitely boosts your overall return on that investment.
Significantly, yeah. So how does that rental income idea show up in the stock market? What are the main ways stocks generate this extrinsic value?
Good question. In the stock world, extrinsic value usually shows up in two really powerful ways.
Okay, what's the first one?
First, you've got dividends.
Ah, yeah. The cash payments.
Exactly. Those regular cash distributions that companies pay out to their shareholders, it's a direct income stream, just like collecting rent.
And it gives you cash flow without having to sell the stock itself.
Precisely. Immediate cash flow.
Okay, so steady income from dividends. What's the other side of that? Maybe something a bit more active?
You're onto it. The second main form is through option strategies.
Options, right? Like covered calls.
Exactly.
Yeah.
Selling covered call options on stocks you already own is a classic example. You collect premiums for doing that.
So you're essentially renting out your stock for a set period.
That's a great way to put it. You
Yeah.
get paid that premium.
Mm-hmm.
And, for people looking for even more active income generation, strategies like cash-secured puts.
Where you get paid to potentially buy a stock lower.
Yeah, you get paid for agreeing to buy it at a certain price if it drops. That also fits into this extrinsic value category.
I see.
The key thing here is that these strategies let you, monetize your holdings, generate income beyond just hoping the stock price goes up.
The parallels are really quite clear when you put it like that. House value is intrinsic stock value.
Mm-hmm.
Rent income is like dividends or those option premiums.
Exactly. It makes these ideas feel much more, tangible, doesn't it? Less like abstract financial jargon.
Yeah, it really does.
So if you sort of zoom out, David's whole framework really encourages investors to see their stock portfolio differently.
How so?
Not just as, shares you buy low and hope to sell high, but as assets. Assets capable of generating two different kinds of returns.
Growth and income.
Right. Growth,
Yeah.
which is driven by that intrinsic value going up over time, and income, powered by the extrinsic value, the dividends, the options premiums.
So it's like building a portfolio with two engines working for you.
Exactly. Two engines for creating wealth.
Okay, that dual perspective feels, pretty powerful. So what are some of the practical ways someone could actually use this to optimize their portfolio?
Right, putting it into action. Well, to really maximize returns, David stresses using strategies that cleverly leverage both intrinsic and extrinsic value.
Makes sense. What's the first step?
His first recommendation is pretty straightforward. Focus on dividend-paying stocks.
Back to the rent idea.
Exactly. Think about it. A good rental property gives you steady monthly income, right? Dividend stocks can do the same, offering consistent cash flow.
And that directly boosts the extrinsic value part of your portfolio.
Correct. It creates an income stream that's separate from what the market's doing day to day.
Okay, dividends. And then for those who are maybe a bit more comfortable with advanced tools, that's where options come back in.
Precisely. That's the second practical application.
Yeah.
Use options for premium income.
Like the covered calls we mentioned.
Yeah, selling covered calls generates that extra income. Again, just like a landlord collecting rent.
Yeah.
The key here, David stresses, is these aren't about wild speculation.
Right.
They're about monetizing the shares you already decided you want to own long-term, adding another layer of extrinsic value without necessarily having to sell your core holding.
Okay, so you have the potential for growth from the stock itself, plus income from dividends, plus potentially more income from options. But that raises a big question. How do you balance all that?
Yeah, how do you those two engines? That's really the third key application, balance growth and income.
Finding the sweet spot.
Exactly. Intrinsic value, that gives you the potential for long-term growth, capital appreciation. Extrinsic value gives you those more immediate, ongoing financial benefits, that cash flow.
So a good strategy looks at both.
A well-balanced strategy absolutely considers both. It aims to build a versatile portfolio, one that aims for appreciation and consistent income streams.
So it's about designing something that can maybe perform reasonably well in different kinds of markets, not just when everything's booming.
It's a huge part of it, building resilience alongside growth and income.
It really does sound like a, transformative way to look at things, just like David described it. He really emphasizes that, after all his decades in the markets, truly getting this difference, intrinsic versus extrinsic, has been absolutely crucial for him for making smarter decisions.
It really is a game changer, as he puts it. He advises us constantly to think of your stocks as properties.
Right. The house analogy again.
Yeah. Intrinsic value being the foundation, the house itself.
And extrinsic value being the extra income it can generate, like rent.
You got it. A truly well-built portfolio, just like a successful real estate investment, effectively combines both that long-term growth potential and those reliable income streams.
So the mindset of a savvy investor then, it's not really about chasing every hot new trend or meme stock.
No, not at all. It's something much more foundational.
Yeah.
As our source puts it, and I think this is really key, the investors who succeed aren't the ones chasing every trend. They're the ones who understand the value of what they hold,
Both kinds of value.
both at its core and in the opportunities it provides. It really boils down to striking that intelligent balance, cultivating intrinsic value for the long haul, and strategically using extrinsic value for more consistent returns along the way.
Okay, so here's something to think about then for you listening. How can you actually apply this balanced mindset? Leveraging both intrinsic value, think long-term appreciation, and extrinsic value for those more immediate financial benefits like income. How can you use that to build a portfolio that, not only grows steadily over time, hopefully,
Right.
but also provides consistent returns along the way, maybe without having to sell your core assets all the time?
Yeah. How could that dual approach maybe safeguard your investments? Give you stability, give you cash flow.
And really set yourself up for more sustained success in the markets, maybe regardless of what the daily headlines are screaming.
Something to really reflect on.
And there you have it. The next time someone tries to hit you with big trading terms at a dinner party, just tell them intrinsic value is the house, extrinsic value is the rent check, and you're here for both. Big thanks to David Duty for making sense of the market's secret menu, and for reminding us that you don't have to be fluent in Wall Street-ese to build a strong portfolio. If you want more straight-shooting articles, smart analogies, and honestly, some top-tier puns, subscribe to Pitt News Magazine at pittnews.com. And while you're at it, check out my weekly podcast, Pitt News on Air, for more stories, lessons, and a healthy dose of emotional chart therapy. Trading is tough, but you don't have to do it alone. Until next time, remember, your portfolio deserves both a solid foundation and a little extra sparkle. See you soon.